All right, good morning, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays. We got a special guest on for you tonight and heard a lot about, had a lot of requests to bring this guest on to talk markets and trading and his views on crypto. And we're going to find out a little bit about his past and how he got into this space. So let's welcome Phil to the show. Goes by filbfilb on Twitter. Phil, how are you today, man?
Yeah, good, Tone. Thank you for having me on. All good, just chilling at home, checking out the charts today.
Yeah, so some people are a lot smarter than others about, preserving their privacy and anonymity. Hence, there will be no camera for Phil. It's a little too late for me. But hey, thank you for joining. And we're going to be doing screen share with a bunch of charts anyway. And I'm going to actually kick that off by showing people where they can find your work as we find out a little bit about you. So let's just let's go with Twitter. So Phil, just give us a background, man. Tell us. So I have my usual questions. I haven't had new guests on in a while, but two standard questions. As you talk about your history and who you are, what is your trading experience prior to the crypto space? And how did you get into the crypto space?
Okay, so my background is I studied economics at university, left there, went on to work for a big blue chip. I was like I trained as a chartered accountant, but ultimately I was an analyst for them. So I was working on big figure forecasts on modeling, big 5-year plan forecasts, looking at merger and acquisition activities and opportunities, and doing business valuation stuff. So it's very much sort of the corporate finance side of things. After working there for a while, I left and went to a commodity and miner, and that's where I really moved more into the derivative sort of contract stuff, where I was looking after the risk management for big money trades, and also production. And around that sort of time, I was really getting into the trading for myself, obviously, dealing with actual traders themselves. So that's effectively how I got into the market. So I was trading for myself at that point in time. And effectively around the same sort of time, I think Bitcoin was about $50. I didn't get into the market at that point of time. I did start getting interested in what Bitcoin was, but the thing was taken off so fast. There was just no way that I could enter the market at a sensible price. You'd look the next day and it was up 4x, and unfortunately I missed the 2013 bubble. So it wasn't. So I was trading traditional markets all the way through from 2013 to 2016, and in 2015 I started getting interested in Bitcoin again. I found out one of my best friends had been cheating on me and had been mining, and I wasn't involved, and I was absolutely terribly annoyed about it because I'd missed the boat on that. So I ended up doing my own research, and I found out, about the halving and stuff that was coming. And I waited for the Sell the News event on the halving, and that's how I got really into Bitcoin. I think, I bought the halving dump effectively in 2016, and then my first buy the dip experience was just when the Bitfinex hack happened. So that was my first and probably my best trade that I've ever done with Bitcoin. So yeah, now I'm just full-time trading for myself and for a fund as well. So it's I do what I love. I make the analogy to my friends, it's like turning up at your favorite football team every week and playing, but it's every day, and it's doing the thing that you're interested in. So with my background, I'm a fundamental analysis sort of guy, looking out into the future. So I think a lot of the people who follow me like my long-term view of the world in Bitcoin, which I've had a bit of success with. And obviously, bringing in some of the knowledge from how miners behave in the real world really has helped me to understand this market. And yeah, I love what I do. And yeah, you'll find me on Twitter and all that sort of stuff.
All right, very cool. A few other questions. When you were trading traditional markets, 2013 to 2016, what assets and what timeframes were you trading?
So I did do some some FX stuff. I was doing very, very low time frame stuff, trading like the sort of 1 minute to 5 minute charts. So that can be quite intense. But then, swing trading the indices is mainly where I was at. And yeah, just some commodity stuff as well, but mainly indices and FX.
Do you still trade any traditional markets, or are you strictly crypto now?
I sometimes I'll trade news events. I like to trade traditional markets around around the time there's like elections on and things. And if there's a really big swing, like I caught the swing low on the markets last year, and that was a very profitable trade. But I don't need to allocate my capital. I don't feel as though I need to allocate my capital anywhere other than in the Bitcoin space at the moment, because the thing's so volatile. I just don't need to trade other markets. It's as simple as that, really.
Yep, and I got your trading view as well. And you have a Telegram channel where you, I guess, announce your calls.
Yeah, I mean, I just talk more candidly on there than you can on Twitter. I think the thing with Twitter is it's sort of, you've got this sort of image.
Well, the problem with Twitter is that everyone has an opinion.
Yeah, exactly. And, also, I mean, the trading channel itself is just a one-way thing where I'm sort of making my own opinions felt and having a bit of banter sort of amongst myself with my followers, but there's no feedback loop. So I don't have to listen to anybody being an idiot, and sort of messes with your trade. And, I'd love to talk. I do talk to a lot of my followers, and it's great fun to get in touch with them. But, it would just be an impossibility to have 13,000 different opinions of what I'm saying being right or wrong or indifferent when, I'm only really there to just sort of, I only set it up to just keep a track of what I was doing and see if I was doing well or not.
Yeah, no, sounds good. And so right now in the crypto space, is your trading mostly Bitcoin, USD, regular spot or derivatives, or do you trade altcoins as well?
So my trading strategy is really I trade derivatives at the most, and it is leveraged as well. So yeah, most of the time I'm playing between spot and futures to try and trade the premium on the futures market, and also trade the funding on BitMEX. But I'm on various different derivatives platforms. I'm across 6 or 7 different sites, but I am in altcoins as well. I will go in and out of those, but I don't take like more than just a short-termist position. For example, I've been trading Tezos lately. I think I've got a few different shitcoin positions really, but to be clear, I'm a Bitcoiner through and through, but I will trade the shitcoins if there's an opportunity there.
Oh yeah, no, there's absolutely nothing wrong with that. And I've always said there's nothing wrong with trading the shitcoins, just like there's nothing wrong with trading penny stocks. My problem becomes when someone is screaming at me that there is a company out there whose stock is trading at less than a penny, but they're better than Tesla in everything that Tesla does. That's when I start to get a little bit irritated.
Yeah, sure. I mean, like I've always said that I don't really fully understand what the shitcoins are, what the value proposition is. It's particularly in 2017, my background being in sort of business valuation, the valuations were just hilarious. It was just, but you couldn't short the thing, otherwise you'd blow yourself up because it just kept going up. So it was very, very unusual. And also, I still don't really understand what the vast majority of them do. I understand what the value proposition is with Bitcoin and what the shitcoins do. They seem to solve problems that don't exist, is sort of what I would say, a lot of them.
All right, and we're going to get to the charts in a second. You also have a newsletter?
Yeah, so I've got a newsletter. So I used to do a lot more of my posts on TradingView, but I send it out on my newsletter now. So that gives the sort of the people know of my 12-month forecast, and basically that's where I give my sort of running commentary in the newsletter. It's free of charge as well. So yeah, subscribe to that.
All right, very cool. So I'm going to take like the next maybe 5 minutes. I'm just going to do for my followers, I'm just going to tell them my opinion on the price of Bitcoin on the weekly and daily chart, and then we'll hand it off to you, and then we'll pull up your charts. And so here we go. So here's, I mean, nothing's changed. We just did the show yesterday with Socrates. And tomorrow, Joe Saz is coming on the show, and we're going to talk a little bit more about the order book and how he trades. The weekly chart, today's Friday. We got a few more days to go. I do trade sequential. I don't believe that is something that you do, but we'll find out when we get to your charts, Phil. And the weekly chart is still pretty bullish. I think we've broken a critical level of resistance, being this trend line. Now, I saw one of your charts and your trend line is drawn differently, and we're going to talk about that when you pull up your charts. But at the moment, as far as the weekly scale is concerned, I remain bullish on this weekly scale now that we've broken a bunch of areas of resistance, and we're still on a 6 of 9 sequential. The daily chart, however, paints a very different picture. The daily chart hit a 9, which again is my favorite indicator, is the sequential. We hit this 9 and we have slowed down. But because of the way this happened, and we did break lots of critical resistance at a higher level time frame, I'm only looking at this 9 as a 1 to 4 candle correction, and then probably higher for one more pump before the halving. It's hard to say, but this correction has already ended, and we are ready to tackle that $11,000 zone. But for now, I would, if I did have a trade, even short, actually, I wouldn't even have a trade right now in Bitcoin, because the weekly is bullish. The daily is very short-term bearish on a pullback. I would stay away from it. I would either go long on a breakout above, say, 10.4 or 10.450, or if I saw it start to pull back towards 10,000, and then we can probably go lower down to the $9,500 range. Right now, between I would say 10,050 and say between 10,050 and 10,450 for the next few days, it's a no trade zone for me. So before we pull up the screen share from Phil, just want to, guys, if you want to support this for YouTube channel, please check out the affiliate page on tonevays.com. The Unconfiscatable conference is coming up a week from now. I will be teaching my trading workshop there. We got a carnivory dinner, poker game. I'm going to try and convince Phil to come out there after the show. Maybe I'll be successful. Maybe you guys won't know if I'm successful or not. Well, hopefully he'll come and play in the poker game anonymously, which would be great. We'll find out. I'm going to keep trying. I always try to get everyone to the events, as you guys know. And don't forget about the Financial Summit going down in the Dominican Republic, 19 to 25, and then again Bali, November 1st to 7th, and Understanding Bitcoin happening at the end of May 28 to 31. All right, man. That's it for me. I'm gonna give the screen share over to you, and we'll see if I can ask some critical questions to your charts, along with keeping an eye on the live chat, see if any of you guys have questions for Phil.
Okay, cool. Right. If it works. Does that work? Have you got the screen?
Yep, we're good to go.
We're good to go. Okay, great. So I thought actually it might be useful to look at sort of where my thinking was some time ago. So some people may have seen this chart. So I was expecting Bitcoin effectively to be in the reaccumulation phase, which I think is fair to say that has been proven to be true. And I thought that we would effectively be coming back through the resistance that would put in at 9,500.
That's pretty good, man. It worked out almost perfectly.
Yeah. So yeah, exactly. So it's been really good so far. And where I thought we would be is at this sort of burn through phase, which is where I thought we would break straight through from 9,500 up towards 11,500, which is the previous weekly resistance as I look at it. The reason why I thought that was because when we've come up through the 9,500 range and back into the 10,000 level from below previously, we've just gone straight through. So we went straight through there, went straight through there, went straight through there, and straight through there. So I was of the view that we'd probably go straight back through. Now I'm sort of, obviously we haven't burned straight through it like I thought we would yet. So I just wanted to talk ultimately about where I think we are now. So we've obviously got this overhead resistance, the decline in resistance, and also we've retraced back up. So we have retraced, or we're approaching the 61.8 retrace off the bottom. So I did think we'd burn straight up to 11,500, and right now that area we've got this decline in resistance, and also we're just sort of around the point of control of the whole of the bear that we had at the back end of last year. So I still think we're going to push to the upside. You know, it was good news that 9,500 or 9,600 was bought up so fast. And my view is that we're probably going to try and push higher. I just don't know if it'll be enough to break through. I could see us correct and maybe after 11.5. So that's sort of my general view of the world. I mean, just to point out, we're sort of stuck in this range again, or we've reclaimed this range between the 50 fib and the 38.2 of the bigger corrective phase that we've gone through. So yeah, so it sort of all makes sense to me. I don't know if you'd agree with that, or I know you draw your line slightly differently, don't you?
Well, my trend line is drawn a little bit differently.
Actually, I think you're a logarithmic, aren't you? That's why.
Well, I'm also logarithmic, but also this is a non-logarithmic chart.
So this is now on log, but I think the way you're doing it almost is, I mean, I do it like this as well. Sorry, this is my indicator. I'll mention that.
Right, but the way I draw my trend lines, like regardless of whether it's logarithmic or not. So my rule on trend lines is I like to draw my trend lines touching the maximum number of candles without crossing their bodies. Right. So that's just my personal rule. So the way you drew your trend line right now is how I would draw it. And in fact, I would actually lower it a little bit on the left side to the top of the green body, because that allows it to also touch the red candle. That's basically the 2 weeks. So, so my rule is I don't care how many shadows I cross, as long as I'm touching the maximum number of candles without crossing their bodies.
Sure. Yeah, it makes sense. I mean, I often just do it without the wicks on, you know, just using the line graph. But I mean, ultimately, you know, the way that you would do it, like the way you've done it, is it looks like we've gained support on and we've broken out of this descending resistance.
Yeah. Now it doesn't mean that my way of drawing the trend line is the correct way. It just means that's how I draw it and that's how I view it. Now, I am of course aware that if I draw the trend line the way you had it, there is still room to the upside. So, sure. I'm aware of that, but I will, which is fine as long as you're aware that that exists.
Cool. So, I mean, either way, I think you're either at the bottom of the range where we've just broken out and we're getting support, and I'm at the top. So it's within the range ultimately, however you draw it, aren't we? So I think that ultimately 11.5 is going to be a troublesome level to get across. You know, we haven't closed across 11,500 on the weekly since, you know, 2018, basically the start of 2018, end of 2017. Oh no, sorry, back in January 18 was the last time we were really closed up there. So I think it's going to be difficult to get across here. I still think there's probably some legs for now, but yeah. So I mean, I just wanted to really talk about like how bullish I really think this market is. I mean, what I've got on here is all of the major moving averages. So the 200, 150, 24, 20, 128. They're the main ones I look at and I use the volume weighted version because I'm just a bit of a stickler for volume. I use it a lot in my trading. So I like to use the volume weighted moving averages, but you can see Bitcoin is on the daily above all of those moving averages, the vast majority of which are all trending up. And the 200 and the 50, which is the blue.
Hey, Phil, can you explain a little bit about the volume weighted moving averages, because no one's on this show has ever used them before. Okay. So it's possible my audience is not familiar with it at all. So
Okay,
if you
so
can give a little more detail as to how that moving average is comprised, that'd be great.
okay, so it's just weighting so the line is plotted based, so in the same way that a moving average is plotted, it's done but effectively adjusted for volume. So if you've heard of the VWAP, which is a volume weighted average price, what this does is it calculates the volume weighted average price at the point and then averages it out over the period that you look back. So it's, if you put on a standard moving average, it looks pretty similar. So if we make this the, I don't know, the 20.
And why do you feel that these are better? Do you think do they react a little bit faster, letting you get into the trade earlier, or they react a little bit slower, giving you more confirmation before you get into the trade?
Well, I think if you think about it, if you have a really low volume weekend and the price spikes up really high, you don't really want to have that impacting your moving average to such an extent when it was traded on, vapor. So what this does is it weights it more towards where the volume is, which is where most of the people got in and out of the market. So it really sort of, it does the business where the business was actually done in terms of the moving average, as opposed to just whatever the moving average price was, which is not influenced by volume. So it's just the way that I do it. It doesn't make a huge difference to what you're looking at. It's just, I feel a bit more comfortable if it's got more weight behind why the price was what it was at the time.
Okay, got it. All right, sorry, go on.
Okay, so yeah, so anyway, they're all bursting to the upside, and we're above all of the moving averages. So the moving averages are all basically crossing bullish or are bullish, and we're above, prices above the moving average. And you can see when that happens, we tend to dance along these the moving averages of the 24 and the 20. So all the way up here that provided support. And we're starting to see that now again on the daily chart. And actually, if you go back sort of in the past, when we are above these moving averages, this market is in a bull market. So as far as I'm concerned, on a daily, everything looks fairly bullish to me. It doesn't mean we can't reverse, but the same is to be said on the weekly. We're above all of these moving averages over here again. And when that happened, we went up. And in the past, that's what you need to be seeing if you think this market is bullish, So it's overwhelmingly signaling to me that we are in a good place right now. And, the CMF showing that volume's going the right way. We're above all the moving averages. So in terms of trends, and trend is a big thing in my trading system, we are in a good place at the moment. I think it might be worth, does that make sense?
No, it does. Go on.
Good.
No, I have no problem interrupting. So just go on until I'll do my best to keep that to a minimum.
Good stuff. All right. So again, if we look at where we are versus the last cycle, because psychologically it does make sense in this market. There are fundamental events which occur around the halvening of supply, and we've just had a bubble of 2017, which resulted in an 85% drawdown on the market, and that is what happened last time, whether we like it or not. So it does kind of make sense to just think, how does this market behave as we get closer to the halving? And in the last bull market, we did end up topping out at about the 78.6 fib. I've drawn the fibs using the candle bodies, because again, in the same way I don't like volume which is on vapor, I don't like price which is on vapor either, and they just didn't last very long down here, so I sort of ignore these wicks. But it made it up to this 78.6, so about $787 in the last run up, and that would take us up towards 15.5K this time around. So I'm sort of thinking, if we can get out of this range and break through the 11.5 barrier, we might see a run up to 15.5K. And then what would be key to see after that is it can 11.5 hold up. So I am very bullish, but I'll go through the way that I actually do my trading to try and explain how, even if it went bearish, I'll be getting out of the market overall. So I like yourself, Tone, I've got an indicator which I built some time ago, and it's basically a candle-based indicator, color coordinated, and it sort of tells you where you want to be getting in and out of the market. So for example, a pink candle is a short entry signal, and then a blue candle is a hedgy position the other way, so hedgy position long, and a red candle is effectively go short. So what it allows me to do is enables me to identify the trend and then also use risk management on the blue and the red candles. And then it's also got built-in stop losses as well. So I think I did give access to this to quite a few people a while ago, and then subsequently ceased it just simply because it was taking up too much time, and also the code had needed fixing. So I am going to be making it available again soon, because it will be better traders than 90% of the people who are listening. No offense to them, it's just, it actually makes money, and we know that most people don't make money trading. So the back test of it's pretty useful. But the way that I like to use it fundamentally is I like to look at it across time frames and come up with a position. So for example, I've got the 2 hour, the 4 hour, the 6, the 12, the 1 day, the 3 day, the 1 week, the 1 month, and I look at what my system's telling me at the moment. So it's based on whatever the last candle was. So if I'm in a green trend and I see a red candle, it tells me that I need to hedge my position. And when I say hedge, that may mean, okay, we're still bullish, you're still long at spot, but you may want to take some money off the table until we see another blue candle for confirmation. So what I do is I go through each of the time frames and I say, you know, what's it telling me? And then I form a view based on that of how strong my position needs to be in the market at the time. So, so as you know, you can see over here, we've got a blue candle within a pink trend, and that means that I should be hedged in my position. I have a red candle, which would have got us out the other day at about 10,350. And, you know, again, I should be hedged in my position. Same again on the 6, same again on the 12, same again on the 1 day. And then everything else is like overwhelmingly bullish. So the market's telling me at the minute that, you know, similar to the TD sequential system, that we are either in a corrective phase or there may be more of a corrective phase to come. On the basis of what we just looked at with the moving averages, you know, I typically think that we are due to effectively bounce off the, if we go down to the daily, we are going to be due a bounce down here at some point, but I don't see any need for it to go below 9.5, 9.600, because that's where the 20-day moving averages are. If you look at the weekly, if we were to correct any lower, you've got down here the 50, the 20, the 24, you know, moving averages all around the 8.6, 8.7 level. So I think that we'll definitely be buying interest below. I mean, my view of the market at the minute is simply it's a bid market, because people want to be long from under 10K. People who are short want to be getting out somewhere below 10K. And fundamentally, people seem to want to buy 10K as well at the minute. So in my view, the market is a bid market, and it's very much looking at the upside. And I just wouldn't want to be short for any amount of time in this market at the moment. I'm certainly taking no positions to the downside, rather than the odd scalp into to short or to hedge. So it's overwhelmingly a good position as far as I'm concerned. But you know, there's no harm in keeping some powder dry in case we do come down to retest slightly lower, which we will at some point. So yeah, so I mean, if we just quickly take a look at the order book.
I got questions.
Okay.
All right, leave this chart right here.
This one,
the one that you just had, the weekly, just a full look on the weekly.
This one?
No, the one you just walked away from, the weekly, just the weekly candles.
Just the weekly.
We haven't even seen. Oh, I'm sorry. Hold on. I'm watching it on YouTube. That's why I'm like I'm on a delay. Right. My bad. Just the weekly candles.
Just weekly. So
this one, yes.
This one,
okay.
Yeah.
Yeah. Now I'm watching it. Now I'm live with you. Sorry, I was like watching the YouTube itself, so I can keep an eye on the live chat.
Okay.
Okay. So, well, general questions on this color coding indicator. Is this something that you sell, or is it something that you give away?
It's something that I sell. Yes.
Okay.
But at the moment, I don't have a commercial solution for that. So I'm in the process of just organizing that at the minute. And then also I want to clean up the code a little bit. So it's not available at the minute. And a lot of people have got it. I get a lot of questions about it. And I just can't offer it until
do you sell it
it.
as like a one-time fee or a subscription?
Yeah, it'll be a one-time fee.
One-time fee. Yeah, so I will. So that's what I did with mine, and I in hindsight that was a mistake. So just a quick heads up, because when you offer it as a one-time fee, the number of what do you call it? Client support starts to go up exponentially the more people have it, but you're not being compensated for that. So just a heads up.
Okay.
Which is why we'll see what happens with what I do, because it was just like I don't want to spend half my day doing client support instead of doing something productive. You know what
Sure.
I mean?
That's one of the fundamental reasons why I stopped offering it, because like I'm a trader, I need to be trading. That's what I should be focusing on, not doing customer support for guys. But at the end, I mean, I think about 250 people took it or something, and I've not had a single complaint of anybody about it. So yeah,
it's not complaints. It's like I changed my trading view name. I don't understand something. Yeah, it's that kind of client.
Yeah, cool.
Yeah.
Oh, okay. So I'll bear that in mind. Thanks for the heads up.
Yeah. All right. Hey, okay. So question.
Yeah.
So the blue candle means you're hedging a position, and purple means that you are in a short. And I already see it twice. So for example, the red candle back in November, right, tells you to November, the other November. Sorry,
November.
2018 November. I want.
Yeah.
2018 November.
Yeah.
Yes. So that candle tells you to go short.
Yes.
Okay. And purple means you're in a downtrend.
Yeah.
So the blue now tells you to hedge that. So does that mean take some profit?
That means take profit on your short, yeah, or go to cash, whichever you prefer.
Okay, but the trend stays short until the green candle.
Yeah, but when I don't really trade it on that time frame. I use the weekly more for
Oh no, but sorry, this is just for understanding purposes.
All right. Okay. Yeah. Okay.
Yeah. I try to understand it better. So the blue says, hey, you may want to take profit, or you want me to lower your position, but the trend still stays negative until the first green candle.
That's right, but there is a caveat to that. So had you have been short from here, and you had effectively hedged here, when you should also have stops effectively on these candles, which would have got you out of your any remaining short when this happened here. So you'd have gone effectively neutral at that point, and then rebought here if you'd have been trading on this time frame.
So most likely, so if you're only trading this time frame, most likely you are not in any position throughout March.
Of this year? Or
no, other March.
Here.
Yes.
Yeah, you'd have probably not had a position at that point. Yeah, but as I say, I used the 3-day, and the reason's quite obvious, because it was green here, So I'd have been long here. So it's just, it works best on the 3-day or the 6-day or 6 hour.
Right. I know, but I'm just trying to understand how the indicator works. And but the long entry is indicated by the move from purple into green, or does there have to be a blue in between that?
If you're trading it by the rules, you wouldn't be long until it went from pink to green.
Okay. Does it always go from pink to green, or you could get another blue in between those?
It will always be there will always be you can get a blue and a green at the same time. But this and the pink could go back to red, but it wouldn't go back to blue.
Okay. Oh, so the pink would not go back to blue.
No, not after it's been blue. It could only be then red or green.
Got it. So there'll only be one blue candle in a pink zone, and then it'll either be red, but if it goes red, then you can get another blue.
Correct.
So you'll never have two reds in a row or two blues in a row.
No, that does not.
Blue and the red will always alternate.
Yes.
Got it. Okay, I understand. Okay. I just wanted to like understand the indicator a little bit.
Sure.
And those little flags indicate potential stop losses.
Yes. So yeah, I mean, the reason why I designed it actually was just to sort of try and take a more logical approach to the trading, which was rules based, and you could just look at it. The colors are quite helpful for it, and it keeps the chart clean. And I don't know if I can get this.
Wait, stand a share. So the red triangle is an indication of a stop loss. What does the green triangle represent?
It's just well, it's the same if you're on the other side of the trade.
Oh, if you were long, you should probably get out on that green triangle because you screwed up.
Yeah, exactly. Yeah, and so in this example down here, I mean, you'd have the stop loss on your hedge here, so you'd have got out of it. I mean, there's lots of different ways you can trade the particular rules in it, but if you do it by the book, you'll only have your stop loss in a long trade would have been here, for example, if you're trading it on this.
Okay. Well, one more question. So let's just pick one of those red triangles. Let's go with the one in early 2019. So let's go to like February 2019.
Yeah.
Right. So when does that arrow show up mid candle, or it has to wait until the candle is over?
It actually needs to wait until the candle's over.
Okay. So the candle is over. That red arrow showed up. So does that mean the top of that candle, the top of that shadow, that's your future stop loss?
Yeah, that's where you would have had a stop loss if you were still short. Yeah.
Right. If you were still short, so you would lower your stop loss to the top of that candle after the candle completes.
Correct. Yeah, but I mean, in this example, there was already one sort of here anyway. So
right, but that one is a little, but that one is actually higher, right?
Slightly, yeah. So I always give it a bit extra though. I don't go exactly off the bottom of the candle because I don't like to get overrun. And I mean, this is how you would trade this if you were doing it religiously, like on an algorithmic basis. I don't, use hard stops, and the reason I don't use hard stops. Well, I do use hard stops if I'm unconscious or I plan on being asleep, but if I'm awake and I'm trading, I don't use stop losses because I want to see what happens with the actual liquidity, around that region, to see if it's a stop run or not. So I personally know where my stops are mentally, but not necessarily, it's not going to stop me out perfectly. However, when I've back tested this system, I've done it based on, being a robot effectively.
All right. Yeah, no, okay, looks pretty cool. All right, so those were my questions. So go on with anything else you want to say. And you did mention that you trade the BitMEX funding rate, so I'd love to hear a little more about that.
Yeah, so I mean, obviously, the funding rate has been going up crazy high to like 0.1%, and that offers quite a unique opportunity some of the time. So if I go to the futures markets, so this is the CME Futures. So one of the styles of trading that I do is that I like to trade the spread on between the spot markets and the futures markets. So when we were down at the bottom here, down at 6,500, the premium on BitMEX futures was like $100. So when I was getting long on BitMEX, I was very long on the June futures. And, I've got this tool here, by the way, it's free. It's called Futures Delta. And what it has is the BitMEX, the delta between the spot market and the futures market. So you can see, whether we're in contango or backwardation. And then also I've got the CME on there as well. So obviously I can have a look at the spread back over what it was like in December, and as I say, it was $100. So I was getting long on the futures market, And that would, it ended up being up at $600. So for every coin you buy on the futures from the bottom in the 6,000s range, it's now worth an additional 600 long. So effectively what you could do is you could just go long futures, short perps, and then it means that you're effectively creaming on the overzealous bulls in the market, get paid on the funding side, and then creaming in this this nice futures premium as well. So that has been probably the best trade this year for me. I just closed that out at, with a $600 odd futures gain, and also took all of the interest on the way up on the other side. So that's been good fun. So yeah, so that's effectively what I've been doing with trading the funding, is what I call it. But I mean, there's derivative opportunities out there as well between the exchanges. You can do, the arbitrage opportunities. You can just arb away the difference in the funding as well, depending on which exchange has got the highly high funding at the time. So that's what I meant by that side of things. Any questions on
that? No, you're good.
Cool.
Yeah, sure. Oh, well, we have a couple of questions from the live audience. I can throw those at you, and then I'll let you go on with maybe lower level timeframes, because you trade lower level timeframes as well. And then, does that indicator we discussed, is it strictly for Bitcoin, or do you use it in traditional markets? Do you think it is useful in traditional markets? Does it apply across other assets?
Well, some of the formulas underlying it are based around the time frames that I look at. So I would possibly tweak it for a traditional market, but fundamentally the logic on it applies the same way. So if we have a look at S&P 500. Yeah, so obviously I was looking at a long trade there. So yeah, it works the same, it gets you in and out of the market, tells you when you want to be short. That's on the daily. I don't know what time frame I'd use it in the traditional markets. But yeah, it does work. You can see clearly, obviously you're managing your risk on the way up and then you're getting out. So yeah, it works the same.
All right, very cool. And a more general question, what's your biggest learning experience from the last bull market that you're taking into this market?
It's a good question. I guess the main thing is Bitcoin is an extremely volatile asset, more so than you can even probably imagine it could possibly be. I remember when I first got into this market and Bitcoin was, around $400 or $300 or whatever it was. And I always thought it would go to 10K, but the pace at which it got there in this market is just incredible. The whole mentality of hodling and the low liquidity on the books and the incentive in an upward swinging market not to sell can really lead to this thing taking off quite quickly. So you need to be aware that there's going to be big drawdowns in the market and be prepared for those. And, you can take some profits along the way, but you're going to have the resolve to get back in the market at the right time. If it's starting to look bullish again and you sold out at the bottom, well, this thing could just keep going up. And if you don't get back in the market when it's telling you to get back in the market, you're just going to be left behind and be bitter that you missed the whole bull run. So for me, that was the main thing. I did really well in the last bull market, and that was because sometimes I didn't appreciate the conviction that you needed to have to get back in. But when I did sell, I did get back in. So you've just got to have a set of rules which tell you whether it's bullish or bearish. And if it's bullish, then you need to leave whatever mistakes you may have made behind when you sold lower, and you're going to have to get back in the game.
All right, no, very well stated. Since you have the S&P up, I mean, I've been a huge bull in the S&P 500 since anyone's ever heard of me, from around 2014, I would say. And a lot of people have been making fun of my bullishness in the stock market, but I've remained a bull for the last 6 years, and we're going higher and higher and higher. Where do you think this ends?
Well, I've got a chart for that. Here's one I made earlier, if I can find it. it's a long time ago now. Firstly, I totally agree with you, and I always have actually. I used to watch your show and just be like, this guy's he's on the same page as me. Now I have this market cycle of the SPX, which I was looking at a long time ago. This is back in October 18, and if you can remember, everyone was so bearish at the time. You can see there was this double top over here, and I was just looking at the market and thinking, this thing's just in its doing what it does, and it's in its cycle, and the cycle is that it's in a bull market. Because if you look, it goes incredibly from the top. I think this is back in the Great Depression. We've had these waves of bull markets.
I got one of these charts too. I don't know if you ever saw it. I did this presentation once, like this long view from like 1913 up until 2017, I think, when I did that presentation. And I just kept saying S&P to 5,000 and Dow to 75,000.
Yeah, and I totally agree with you. I mean, you know, I think Tom Lee did a good presentation with his fund strat about how we're sort of going into the phase where the millennials will be picking up the next leg on the investment front and handing it over from the boomers. So a lot of interest in new money is going to come in. You know, we have put in that new all-time high, and while the Fed and the other central banks are pumping money out, there's nowhere else for the money to go. So it's, you know, the reason why the stock market's going up, it doesn't really matter why it's going up. If the big CEOs are pumping money back in, cheap money back in to do share buybacks, then, you know, so be it. Then I'm not going to sit there listening to Zero Hedge tell me that I should be a bear, because if I'd have been doing that since I got, you know, in the markets, I would have been, you know, I'd be half as rich as I might be now, you know. So to listen to the fear mongering in the SPX is just it's a terrible investment decision. If you've got the ability to go back in time and look at them and do the maths, and you held on to, you know, $1 preciously because you thought you were going to be in a bear market forever, you've missed the whole bloody thing. So again, it comes down to, you know, you've got to understand that you may have a view on the market, and your view, unfortunately, may be valid. You know, the market may be completely overcooked and running on fumes, but the truth is that this thing is going to keep going up until it doesn't, and the trend tells us that it's going up, and until it fundamentally breaks down, then I'm a bull.
Yeah, and what I've been saying is, from a fundamental perspective, I mean, the companies that are gonna just fly through the roof are the companies that are creating automation. Like, people keep making fun of Tesla, that they don't make any money, but they don't understand that the ultimate goal of Tesla is to have every car on the road be a self-driving Tesla, right? And people don't see it. Like, the play for Tesla is to eliminate the entire industry of drivers, which is the #1 employer in the US. So if Tesla can pull off eliminating 3 million jobs, it may suck for those people, but how many truck companies that hire employees are you invested in, and how are those stocks doing if they even exist? So all that value, all that wealth, all that like liability, all that cost saving, right? So the insurance companies like that will be cheaper to insure the world of self-driving cars. So all that wealth, that either the savings from automated car driving or just the innovation, all that wealth is now going to go into Tesla stock.
Yeah, absolutely. I mean, Tesla's an absolute no-brainer for me. I'm really annoyed that I'm not in on the train. Not annoyed, but
me too. I've been talking about Tesla as being the biggest market cap company, and I haven't bought it because I just in my world, and that changes next year for me. But in my world, it's and it's the same in your world. You know what happens if you're not 100% focused on trading. Like, you could be missing a trade right now by being on this show.
Sure, but you know, you have to get on with your life as well, don't you? So,
right. But that's the thing. And that's what people don't understand. That I'm on a plane every 4 days, so I can't be in an asset. You got to be focused. You got to be
Yeah,
focused on trading.
I mean, it's just I'm absolutely in the zone on Bitcoin. You know, it's I live and breathe it all of the time, so it's easy for me to sort of, you know, I get in rhythm with what's going on in the market. And unfortunately, I just missed this. Obviously, I drew this channel a long time ago, and when this broke out, if I'd have been paying attention, that was an obvious buy. It's the same as down here. You know, it was a breakout. So
well,
I think
buying off the bottom of the channel is also legitimate, at least off of that first dip when it bounced off the bottom of the channel in 2019 at like $150. After that, that would have been on that first pullback, would have been a beautiful buying opportunity. I missed that one as well.
Yeah, I know it's it's a bit unforgivable looking at the chart retrospectively, actually. But I mean, look at the volume on that. You know, it was a big breakout. But you know, there's a gap back here at 650. So
yeah, I think it is likely it will come back to the top of that channel, though it didn't do it last time. So you never know.
It's doing a Bitcoin. You know, it doesn't come back.
Yeah. But hey, let's get you back in that Bitcoin zone. Most of our viewers are Bitcoiners.
Sure.
So let's take a look at some more Bitcoin charts from you. Maybe lower level time frames. Maybe you can mention a few of if you're in a trade right now, if you're willing to share.
Yeah. So I am. The way that I trade is I define my risk based on whether or not we're in a bull market or a bear market. So when I've decided, you know, the 3-day chart was the real confirmation for me that we were moving to the bull side, which I think I tweeted out at the time. And when that happens, you know, I effectively change my risk from being in US dollars into being in Bitcoin. So when I define my risk on an entry and an exit of a trade, I'm basing it on how much Bitcoin I'm going to win or lose in it, as opposed to a USD when I'm in a downtrend. So I am very much long at spot with no intention of coming out of it at the moment. And I'm
are you long with leverage or
at the moment I am long with leverage? Yeah, I mean I took quite a lot off the table on this on the run up here. So effectively, what I'm trying to do is I'm buying the dip on leverage, and then you know where there's a good risk reward opportunity, and then I'm just scalping within that. So when it then takes a swing higher, I'll come out. So it's effectively a buy the dip model. So I mean, at the moment, I am leveraged long. We've had the drawdown from the top, but I'm waiting for some sort of confirmation before adding. I will add if we can get back above and start pressing towards 10,500. That's what I really want to see. So I mean, I'm just looking at the order flow here in the order book. You know, we've got big bounce when we had these big orders at BitMEX, and we had continuation. So we are starting to see them come in again, but you know, we need to entice the buyers into this market a little bit more. I think we're coming up to resistance, previous support and potentially now resistance. So if we can break through, you can see what happens. You know, we do these big run ups quite quick. So you know, if we can start closing, I think we've got a rejection down here, but if we can start closing above here, I'll be looking to go long again, adding to my position. But yeah, I mean, overall, if we just have a look at Finex, there's still a big seller at Finex. I think people might know who that is, who are on Twitter. But there's a big seller up here. You can see all of the orders at 11K. So that's going to be a challenge to get through that. But we've done it before. So we had these big sell orders again at Finex, but eventually we broke through. Same again back here down at 9,000. So I'm expecting it to be, you know, you can see there's a bit of room to the upside there. So I can definitely see us having a go at 11,000, but it may take a little longer than I thought originally for us to get through. So that's really the order side of things. I need to.
Right. I got a few questions from the live chat if you want to tackle those now. Thank you, Brent, for your question. So I'll just read it verbatim. I think it's a little tricky to understand the question, but maybe you can give it a shot. if we get support in $9,500 range, then burn through to the $11,500 range. Do you make additional spot hodl buys besides trading it to the upside from, let's say, 10,350?
My view is that you should already be in your spot position, really. So it's a difficult one, I guess. I mean, it's obviously not financial advice, but I think buying any support, major support level, is a good risk reward trade in the short term. While we're above all of these moving averages, buying the major moving averages, if you want to be in a hodl position, then that sort of makes sense to me. And then, yeah, I guess so.
All right. So go on. Any other charts you want to share?
Nothing really, other than the futures market. I just really wanted to show the extent to which the futures market has been pushing us up. So if I just quickly have a look at the CME, and this is why another reason why I'm quite bullish in this market. There it is anyway. So on the futures, on the CME led us all the way down as far as I was concerned. Whenever I was looking at the charts, the CME was always the most bearish all of the time. I mean, you could see these 3 red candles. It was obvious we were going to break down. That was the place to really get short if you're in any doubt. But the CME volume, I mean, you can see it's very heavily weighted to the buy side. Very, very interested in this market, it looks like. And the OBV's made new highs, even higher than over here. So it's obvious to me that the futures market and the institutional players, well, not necessarily institutional players, but the big money players are very much interested in this market at the moment. And if you look at SKU, which is a derivative market trader's sort of dream, really. I'm not supported by them in any way. I'm just sort of saying. But you can see on the CME futures, the total open interest has been going up over the last 30 days, and that's a good sign when you're in a bull market. And the volume and the open interest are both going up. Backed in open interest is going up as well, which is good news. And then, yeah, I don't know, the open interest across the whole of the market's going up. The futures market, the premium's pretty bullish, and I know that can be sometimes a bearish thing, but I don't think it's completely overcooked. 11K for July or for June 26. I think that makes sense. So yeah, overall, market looks good. Market looks healthy to me. Everything seems to be on plan. I think we are already. I don't think there's any point in trying to wait around for some sort of pre-halvening pump, because in my view, we're already halfway through it. So yeah, so that's my view of the market, really.
All right, so let's stick with that view. So what is your, I guess, most likely high target going into the halving? How high do you think we can go before the halving?
15 to 16K is really sort of what I'm looking at. I'd like us to see us get up here and start, putting on a new high over the top of 2019 would be really bullish. Maybe get up 15, 16K and then a correction and find support. I really want this line here to become support. If we can get 11.5K and create a new trading range above, find support there, I think this whole thing is going to look a lot like a cup and handle, which will have a breakout back test to form a much bigger cup and handle, and then off we go. And I think where we'll go to actually on that is, again, if you look back at 2016, we had the halving pump, we had this corrective phase, and which I think, to be honest, it looked like it was going to happen anyway. We had my first buy the dip moment, and then we didn't really stop until the 1.618, which was it did print a new all-time high, but then it got a correction afterwards. So I think if we were to do the same again, it would look something similar. 28, 30K, maybe 20 end of the year possible. It's obviously very, very bullish outlook. But failing that, I could just see us getting there in some other time the following year. I just want to point out, this is my opinion. It's not financial advice, but I view the risk as being to the upside rather than the downside for me at the moment. So got to be nimble, obviously, and get out if this thing falls over. We know how quickly it can happen, but I'm bullish.
So considering that you're bullish, and your answer is going to be obviously a very small chance. So what chance do you give it for a significant pullback, something that takes you back down to that, let's say, $7,000 range at this point, sometime this year?
7,000, that's wishful thinking, I'd say. It's, as a trader, you can't rule anything out, right?
Well, that's why your percentage shouldn't be zero.
Yeah, exactly. So I'm absolutely, if this thing wants to retrace to 7K and I can get on the downside, then great, But this is where the 50-week moving average is. If we are in a bull market, I mean, my thesis has to be, my percentage has to be weighted upon my opinion, and my opinion is that we're in a bull market, and the chances are that we'll get support at 8,500, which is where that CME gap is, if there was anything to the downside. So the chance of us going below 8,000 now, I don't know, I'd give you 15%.
Okay. And I'll throw a few more similar. So when do you think we can challenge the all-time high?
Well, I think certainly we need to see what we can do in the halving. I think if the halving pump continues and we can get above, if we can close above 11,500 on the weekly, I think we could have a go at it certainly at some point this year. It's probably not going to happen until next year now. But this thing, never rule it out this year. Could happen. But I think it's more likely to do what it did last time, which is, it had a good go at $1,000 and then it stopped short. I think somewhere over here. We might have a look at it.
All right, no, I'm loving your answers. I'm sure the audience does as well. So let me make the audience really happy. Where do you think this current bull market cycle run ends? I'm assuming that this bull run could go for the next 3 years, right? Because after the halving, it should get a little bit better. So where do you think this current bull market will top?
Honestly, I was looking at this yesterday. I think we're going to struggle to get past 60K. I think that 60K is going to be a really, really troublesome level to get across. I'll certainly be, looking to book in some serious profits at that point. So I think you have to be a little. I think you said it right, actually, when I interviewed you. I think you said the return that you get off these long-term positions versus the risk of you getting it wrong is terrible trade. So trying to go higher than 60K, I think would be a little bit foolish at this point, but certainly around 50, 60K, I think would be sensible.
I'm around the 45K area.
Sure. I mean, I'll take it.
Yeah. And you know what? Let's close out on this. We have a couple of people that are asking. What metrics did you use to help you call the last big swings? So we can go with the last 4. When and how did you identify? We'll work our way backwards, and then this will be the last question I have for you. So, what metrics did you use to identify the $6,500 bottom? Prior to that, the $14,000 top. Prior to that, the $3,500 bottom, and prior to that, the 20K top. What metrics were you using, and around what time did you see that as a reversal?
So I might just slightly change the process a little bit if I can. So well, actually, the most recent bottom I called was the 6,500 bottom. I did think we might potentially have stopped at like 7.5, but I always have a couple of plans, so I thought we might go to 7.5, but we didn't find support. So the next obvious place was 6,000, and that the way I came up with that was it's really all based around production costs. So as I sort of mentioned, my history is in mining, and obviously I understand that if you've invested in your capital equipment and you've got an obligation to your shareholders to make a return on that, and the market price is massively above where it needs to be, and you know that you're going to be producing output, then the chances are that if the futures price is massively ahead of the spot price, that you're going to be hedging aggressively back down and get yourself back down to where the spot is. Or particularly, again, when you've got a massive bull run, which has left you hugely above your production cost, it would make sense for you to, and you know that what the life expectancy is of your miner, then it would make sense to effectively hedge all of that away. So that was the thesis that I had, was that we were going to get back to this marginal cost of production, and the marginal cost, I think, of the S9s at the time was around 6,500. But also, we had this huge wick down here, this reaction. The way that I called the 3K bottom was exactly the same as this, because I knew that there was a major reaction at 3,000, which got bought up to 5,000. And there was a similar thing here, and the miners bottom was, saying that it was going to be about 6,500, which was the same thing that happened last time. So I was like, hey, it worked last time, it's going to work probably again this time. So, it did. So this is the 3K bottom, where I said it again, blah, blah, blah. I did some basic maths and research on this to show us what the cost of production estimate was around the time. And again, that, it's quite amusing actually. These predictions were to within like sort of 40 or 50 bucks of the actual bottom. So that's the bounce off the 3K again. So yeah, that's the way that I was sort of calling the bottoms. And then the tops, it was part of, this logarithmic trend. So I was looking at that. I think that was the first time I ever actually engaged with you, was over that logarithmic trend chart. But yeah, the top, it was just going to, I can't find it now. There's so many charts. But effectively, the logarithmic growth curve at that time was saying about 20,000 was the top. So I was just like, look, this thing's cooked at 20K. And yeah, so obviously I came out of the market at that point. Getting to 14K this time around, or in 2019, that was more just, it was a 61.8% retracement of the drop from 20K. So it was as simple as that, really. So it's kind of like all of my trading's looking at what's going on with the fundamental picture. Are the fundamentals looking good? What's it cost to produce a Bitcoin? What's the market thinking? Where do we need to be thinking? Is this a bull market? Is it a bear market? And does everything stack up? And when, you've got the green light on the trend of the market, or, my indicators telling me I should be long, when all of the moving averages are pointing up, when, you've got a fundamental halvening event, it's kind of easy to see these things in advance with Bitcoin, that it's just going to happen. So that's the sort of method that I apply, really, that's how I do it.
All right. Awesome. Thanks for that. And I'm going to jump over on screen share so I can show people once again your links. So for those that are asking, I flipped over to, there we go. So you can, Phil, thanks so much for coming on the show. And once again, you can check out his work on Twitter and also on Telegram. And there are links to the Telegram channel where Phil puts out his calls. And once again, guys, for those that are watching, if you want to support this free YouTube channel, please use the affiliate links on tonevays.com and come out to Las Vegas for Unconfiscatable. We got a poker tournament. We got a carnivory dinner, financial summit for traders to meet with hedge funds or just network with each other, come up with ideas. And this is how everyone becomes a better trader. And there's also for the Bitcoin, as far as the use cases of Bitcoin, come out to understanding Bitcoin. All right. On this note, I'm going to cut screen share. And any closing thoughts, Phil, before I let you go?
No, just thank you very much for having me on the show. It's been a pleasure talking to you. It's been a long time coming. So yeah, hopefully we'll do it again sometime.
Yeah, no, I'm happy to have you on again. We had 1,100 live viewers during the show. So guys, thank you so much for watching. Hit that subscribe button if you haven't. And I will see you all on the next one. Got Joe Saz coming up tomorrow for another one of these shows with fellow traders. All right, guys, thank you for watching and see you next time.